Alright, I want to do a quick video, kind of look at where we are, look at TQQQ. And one of the things that I like to do is I try to take a sanity check occasionally and see how I'm actually feeling about the market as a whole. Some of the geopolitical things that are happening and things that I think might move the market, the Fed, the interest rates, those type of things. So I think we're kind of in a mode to where earnings have come out. We might slide a little bit, but I do feel like that we might continue this bull run. Probably not aggressively, not like we did into tech earnings. So we might slide back. We might trade sideways for a while, but we'll be on a gradual incline up, I would think. So having said that, let's look at where we are as far as risk goes. So we have the 131s for the big money that we have. So we have 58 and 8, so we have 64 contracts of the 131s for 8-6. We moved them from this week to next week. So if we'd kept them for this week, we would have been fine. We would have gotten all the premium. We rolled them. We got $1.75. Turns out, because this went down $3 today at one point, even over $3 at one point, that we could have probably made a little bit more by rolling them today. We probably made another $1 because it went down $3. But that happens. I'm not sure how to get around that. Of course, if it went up $3, then we'd look like a genius. So, but instead of moving them Wednesday, we could have almost let them expire for this week, and then rolled them right at the end. Probably made another $1. So, anyway, that's where that is. But what I want to look at in this video is, what if this was put to us? What are we going to do then? So, if this were put to us, let's say at 131, and we had to buy it at 131, how comfortable would we feel? And right now, I think I'd feel pretty good, because the high is 137.57. So, trading about $960,000 just in Fidelity. So let's say this went and I had all of TQQQ, assuming, let's assume that for this illustration. So if it's a 131 and I waited until it went back up to 137, close to the all-time highs, then that would be over 4%. And I think I wrote it down here. It's right around $44,000 on $960,000. Well, that would put us over $1 million in Fidelity. So 44 plus 960 would be $1 million and 4,000 left over, 4,000 and change left over. So I feel pretty good about that. Now, if the market traded sideways or traded down some, and we had to hold it for a while, maybe until, I wouldn't say until next earnings, but let's say we had to hold it for 60 days or something like that, would that be the end of the world? And at the end of it, get 50 grand, $44,000. I think that'd be okay. I'd be okay with that. So these are the kind of things that I think about. If you're in a good position to where you could possibly put the stock, but it would be $6 lower than where it's already traded the last few weeks, the highs anyway. Another thing, I think I've mentioned a couple videos. This thing trades between $3 and $4 a day because it's a triple and it's just normal market fluctuations. And so that's why I'm always saying buy the dips, sell the rips. Because if you buy dips on a security that's up over 50% for the year, then even if you buy poorly, you're going to get saved eventually if you just don't take a loss, because the security itself is up 50% for the year. I hope that makes sense to people. Now, does that mean it'll be that way for the rest of the year? Maybe, maybe we'll get a double this year. But let's just assume that that's not going to happen. Will we see some appreciation? I mean, I think so. I think these tech stocks, or battered down some because of the COVID thing, and I think that they're going to come back. And then the non-tech names, I think they'll come back too. So this is something that you have to think about as you're holding positions. But I think we're in a good position here, where we're okay if we get the 131s and we don't roll them and we just take the $1.75 that we got. We're okay with that. We're okay if it goes down to 130 and it's put to us, and we have to buy it at 131, and then we just hold it till it goes back up to 134 or whatever. Or maybe we hold it till it goes all the way back up to 137. Maybe we hold it for a while. I think we're in a good position here as far as that goes. We do have the calls, 300 calls, and those are at 133. So if it's way over 133, then I guess we roll the calls again, or we just take a look at it and see what's going on there. So I hope y'all kind of do your own sanity check when y'all do these. Sometimes we get caught up in we make a trade and we do it deep enough, and then it doesn't get put to us. And then we do it again, it doesn't get put to us. And then we do it again, it doesn't get put to us. And then we get used to the fact that it never gets put to us because we're a genius, and we keep picking something that's down further than this security that's run 50-some% this year, and just keep collecting income. But eventually it probably will get put to you. Either we'll have for some reason the market's tanking or whatever, or you're playing closer to the money. Now that's another thing we want to talk about is how close to the money do you want to play it. Obviously you'll get put to you more if you're playing it very close to the money. So if it was at 137 and you bumped it to 135, you've got it put to you at 135 and it's at 132. Now, even in those situations, if you got $2 for it and you're down $4, or you're down $3, net you're not really down too much. You're down $1. So can you wait for it to bump back up $1 and then sell it at $1.50 and still make money? These are the beauties for these options. The only time you really get messed up is when something happens. You still have some long to go on the option, and since we're playing weeklies, we normally only have a week. But let's say some event happens and the market's just tanking, the next day it's tanking, the third day it's tanking, and it doesn't look like there's anything in sight because the market's just going to tank because of this particular thing that's happening. Now this COVID would be an example of that. Something like that happens to where you wanted to get out, and because it's some tragic event and it looks like it's going to be sustained for a few weeks or months, and if that's the case, then that's where you would get to where, okay, time is not on your side at that point. But that doesn't happen very often. Normally in a bull market, you're hitting all-time highs, you keep going up, and so playing it closer to the money actually makes you more money. I have a feeling there's a lot of people that would play this for income, and if you're playing it for income, that's another thing that I'm looking at, because it looks like I'm going to have well over $1 million, since I have 1.14 million now. just in the stock market. And if I don't add anything to it, let's say, I make, well, let's just assume that I'm going to end up with, between $1.5 and $2 million when I try to, quote, retire and try to get income. When I do that, if I have $2 million and I'm trying to get 2% a month, then, this might be a vehicle to do that. And people that are looking to make income, I think selling puts for like 1% way down out of the money is a good risk reward. So that's another great way to do this. Don't get scared if it gets put to you, as long as you think the security is going to go up. If we have a sustained drop that looks like it's going to be multi-day or multi-week because of some tragic event that happened in the nation, then that would be another case. And so in that case, you might consider taking a loss. But normally I would say just wait it out. And, we haven't had any losses this year, even though we might have to roll something. So, and that's another thing that you can do. You can trade time for your mistakes. So let's say you're down $1. You don't want to take the loss. You don't want to get put to you. You can look out a week or look out 2 weeks, and you might be able to get money. So, like I moved it from 131 to 131, I got $1.75. So essentially, I had the same position. I just moved it out a week. The fact that we got another week for the stock to potentially go down, somebody's willing to pay extra money for that, and that's kind of how these options work. So anyway, sanity check. I think we're doing good here. As long as we don't go under 130, then I think we're going to be fine. If it did get put to us, we would just hold it, and then I think it would bounce up to 134 or something like that. I could get out of the positions and then still make all the premium and the money that is laid on the table. So when you're only trying to get $1.75 and the stock's moving 3 points either way, thrashing back and forth, it's not unrealistic, I don't think, to get that. So let's play these and try to make money every week is kind of my goal.